Hello friends, this is a Trendline Investor providing the Nifty outlook and the Trading with Trendline Investor series for the 22nd of July 2021. Now, for beginners to my channel or for people who have subscribed to my channel new, this video will be divided into two parts. One, the Nifty daily outlook for the day, and the second part would cover the Trade with Trendline Investor series. So if you're looking only for the Trade with Trendline Investors part, then you can directly head to the second part of this video. For people who are again new to my channel, the Trade with Trendline Investor series is a positional trading series where I trade with a starting capital of 1 lakh, and I will also be sharing all my trades and also discussing the learnings on a daily basis. So I'm sure this would be very beneficial for you and also for me, because I'm also going to learn along with you in this journey. So let's learn together. Now, going into the Nifty outlook for today, which is the first part of this video, I will be covering what happened to the markets in the previous session, key learnings from the previous session, my market outlook for today, which will include the long plan and also the short plan. So jumping into the first part, what happened to the markets in the previous session? So we had another crazy gap down in the previous session, and we saw a nice sell-off in the first half of the day. Right? However, the markets tried to gain some ground in the second half of the session. So we did have a nice move. So if you're short, and if you're carrying your shorts since the last two sessions, you must be now trailing your stop towards this pivot, recent pivot high, right? So if you see, we've been making lower highs, continuous lower highs. So this was high, this was the next lower high, then we had this lower high. Now we have again been rejected from the same lower high. So for now, the trend is purely down, and for any longs, we need to clear this level over here. Only then I would be taking longs, right? But according to our plan in the previous video, one must have gone short in the previous session below 15,700 for targets, below 15,700 for targets of 15,600, 630. But we even had, we made a low of 15,678. Now, however, if you were trailing your stop well and good, otherwise, we know that right now is not a time to go long. Right now, as per today's chart, we are still, short, and we need to cross this level to go long. Right. So for now, if you are holding your shorts, just trail your stop and keep trailing your stop until we break this resistance over here. So for now, the Nifty has given a breakout also from a short-term downward trend line. So if you just notice this trend line, it's not a perfect trend line because I don't have 3 touch points, but at least, this, if you see here, we had these continuous touch points here, the second touch point, and we're kind of retesting this trend line over here. So for now, Nifty has given a breakout from the short-term trend line, and that's a very good sign. But however, remember, the level of 15,682 also needs to be crossed if you have to go long. You should never go long just on a trend line break, but along with the trend line break, that should be an alert, and you go long only when the previous swing high is crossed. Right? So what's the learning from the previous session? So days like the previous session that we had is when you're going to make good profits and you get very good trending moves. But remember, you get such moves only 20 to 30% of the times, and the remaining time, all you have to do is just keep taking your trades and just take those minor losses or minor profits. So you should be aware that to enjoy days like the previous session, you should follow the plan no matter what, and one should actually try not to lose money, lose not much money, but lose small capital in every trade when the markets are really not trending much. So capital production is the only thing that needs to be in the mind of a trader or investor. Without capital, there's nothing you can do. So that's the point I wanted to mention today, and that's the key learning from the previous session. So what's my view for today? My view for today is I think the panic in the markets should be complete for now, and we should now probably head higher, since we almost retested the primary trend line, which I've been very vocal about on Twitter, on my newsletter. So I've been talking about this primary trend line since many weeks now. So since we have done a retest, so we took almost 1, 2, 3, 6, 7 weeks, and we're almost there. So probably one more dip towards 15,600 levels, but I'm not sure if we'll really get that dip. But for now, I feel that the panic in the markets are complete, and we should now probably head higher from here. Right, but this is the bullish bias in me talking. So if we break that primary trend line, which I just mentioned, then we should see some sell-off in the markets. But do remember, there will always be some stocks which will be continue to show strength and which will probably not move that much down, but they would probably consolidate, sideways. So if you're holding to individual stocks in your portfolio, you should not sell off your portfolio just because there's a trendline break in Nifty. So even if there's panic in the markets, don't sell your stocks unless your stop loss hit. Now let's look at the long plan and a short plan for today. So if you're holding shorts, then you should be trailing your stop to 15,682 levels, as I mentioned. So that's a very strong resistance for now. Otherwise, the long plan is if we go above 15,682, either with a gap up. So basically we gap up above 15,682, and that's how sometimes we take out resistances. So if we gap up above this point, then you can look to go long, or if we just, open somewhere here and then we'd higher above 682, then also you can go long, right? With the swing low as stop. Now, probably the targets that I'm looking for is this zone over here, which is 15,770. And also if you notice, this is also a gap zone, right? So that's the level I'm looking out for if we cross 15,682. Now, what's a short plan? If we go below 15,575, which is this level over here, right? So that's the level I'm going to watch out for shorts. So if you go below that, then one can short with the swing high as a stop and trail your stop as usual. If you go higher, probably during the day, if you head higher, and probably get rejected here and start forming lower highs and lower lows, then also you can go short with the swing high as the stop. So that's my Nifty outlook, guys, for today. So if you're a Nifty trader, I hope you enjoyed my outlook. Now let's jump into the second part of this video, which is the day 7 of the Trade with Trendline Investor series. I hope you're enjoying the series and the videos. But yes, we did hit 2 stop losses and we exited one of the positions intentionally. But otherwise, I don't think we have lost much capital. But let's get into the series and let's look what's in store for the next few days. So I'll be covering in this series, I'll be taking a quick look at the trades in Zerodha and also what's the current status. We'll also be looking at the charts, what's happening with the stock charts, and we'll be reviewing a trading journal, and also we'll update the stop loss if needed. And also any new entries, new watch lists, new stocks in the watch list, we'll be taking a look at that as well. So jumping into the first part, which is our trades. So this is the holdings as of now. So we had 7 stocks to start with, but then we exited, around 4 stocks. Avanti was first intentional exit. Gufic Bio, stop loss hit, Shakti Pump stop loss hit, and Hindustan Zinc stop loss hit, right? But the key point to notice here is that look at the losing amount, right? So every time I lose, I don't lose anything more than 1%. So in fact, in Shakti Pumps, actually the stop loss was at 800, but I think my GT didn't get triggered again. I'm not sure why, so I had to manually exit at 816. But if you see, the amount I'm losing here is nothing more than not even close to 1%. So even after all these losses, I've basically lost only 1.8% of my capital, right? And that shows how strong I'm protecting my capital, and I'm really, really focusing on protecting my capital as of now, because we're just starting off and we are taking big position sizes. We are taking 15%, 30% position sizes, but we are ensuring that we don't lose anything more than 1%. Now, I'm sorry, I have to get my charger. Yeah, so if you're worried that so many stop losses have been hit, I think there's really nothing to worry about, because this is part of the game, and our bad luck that we have started right when the markets were not good. But if you just focus on protecting your capital, then I'm sure that we will make up this money in just a couple of trades. All we need is just a couple of good trades and a decent market. We don't even want a big rally, just a decent market, and the stocks that we are focusing on will move higher. So for now, yes, so we are focusing on 3 stocks: Apar Industries, Fact, and Tata Steel Bhushan Limited. There is some probably results coming for Tata Steel Bhushan Limited, but I'm not sure. But for now, we are safe. We are still, even if we look at this one, right now we are at a loss of 1,000 rupees, so not bad. But I'm just going to the orders just to show you the GTTs that I have in place, right? So I have my 3 stop losses in place, and I have a buy order for Apar Industries. That's basically the pyramiding. So I'm just going to go to the stocks. So Apar Industries, we already have a pyramid, at 577, right? So we have still not that pyramid is still not executed. So markets, it has to move higher for that pyramid to execute it. Now that's also something you have to note. I am not adding on to my positions when the stock is going down. Rather, I want the stock to go higher, and that's when I'm going to add on to my positions. Now that's a very key thing that novice or beginners in the markets don't do. They average when your stock goes down. Now I'll just take a simple example from the trades that were closed. Now let's say I added Gufik Bio, at 180. Sorry, at 190, my stop loss is 180. Now I don't have a stop loss, and I keep adding as it goes lower. Now, as then when the stock starts going lower, your losses are going to compound, and that's how you start getting into this vicious cycle where you keep adding more and you're going to compound your losses. But rather, what I'm focusing on here is I am cutting my losses to 1% of my portfolio, but I'm going to add on to my stocks once they start heading higher, and I'm going to keep compounding on the stocks which are moving higher. So in that way, I'm ensuring I will not lose much, but my loss is fixed, but my returns or my portfolio gains are, it can go up to even 30%, 40%, 100%, who knows, right? But our duty is to just protect the capital and let the markets give us how much the market wants to give. So yeah, let's look at the charts that we have. So Apar Industries it's been in our portfolio since some time now. So the trend line is still holding. We have again retested this zone over here. Now our stop loss was 550 only if we add more, but right now we have not added more, so our stop loss continues to remain around the 530 levels, right? So right now we've again had a dip on the previous session, so probably you're going to consolidate for a few more days because this sell-off needs to be absorbed, and it might take a few more days before we move ahead in Apar Industries. Now fact, there was a nice sell-off during the day, but we did not close below 130, which was a stop, right? So if I just go to fact, stop loss was 130, right? So we went all the way to 132.15, but we closed 135.9, so that still looks good, which means this zone is actually acting as a strong a strong demand zone or a strong zone where a lot of people are buying. So for now, again, fact, there's nothing to look at. We're still okay. In Tata Steel Bhushan Limited, again, this low of this low here is still acting good. So our stop loss is around 87, but we had a low of 87.1. We just missed our stop by 10 paisa, right? So that was the stop. So right now it still looks good. Let's see what happens. But today so since I have more capital now, and I'm still not, gone below my 5% of portfolio heat. Now, right now I'm risking 1% of my capital on every single trade. But the moment I hit 5%, when I lose 5% of my overall capital, then I'm going to cut my risk per trade to 0.5% of my capital, right? That shows that we are not a good environment and we need to take care of our money. So once I lose 5% of my capital, I'm going to cut down that risk per trade from 1% of my capital to 0.5% of my capital. But for now, I'm not focusing on the stocks. Now, we had a nice sell-off on Friday, on the last session, and there are a lot of stocks. Shakti Pumps fell by 4%. I wasn't really expecting that because it seemed to be a strong stock, but a stock falling 4%, when many of the stocks were not falling 4% is something that I didn't expect. Now, a lot of stocks are seeing a strong sell-off, so I'm not focusing on these stocks. Rather, in my watch list, if you see, I've added 4 new stocks, right? I've added Jubilant Ingria, I've added Shridik Cement, India Cement, and Kansai. Now, the cement space looks fantastic. In fact, all the stocks have been doing very strong, and I hardly saw any cement stock in the red on Friday. That's primarily because of the results, I think, of some of the companies which came. So I'm looking at the positive stocks, and I'm going to add these stocks above a certain level. So now, just to look at the charts, so Jubilant Ingria is just doing a retest, and it has massive volumes on Friday. Now, you might ask, how did I choose this? So basically, my primary scanner for breakout is CCI 34. I'm just showing the period here. CCI 34 crossing 100, not greater than 100, crossing 100 on the daily time frame, or CCI 100 crossing 100 on the weekly time frame. Either of these. Now, in this case, the daily time frame, after many days, since I think this is almost 1 month consolidation, more than 1.5 months consolidation, and right now it is breaking out with nice, not breakout yet, but nice volumes the last 2 days. CCI is gaining momentum, and that's how this came in my scanner. Now, Shridik is one of the strongest cement stocks, And again, this is above 100, but this didn't come on my scanner today. But I knew that India Cement came in my scanner because India Cement went above 100, and I knew Shridig Cement is a good small cap stock. So I went to Shridig and I just checked the charts, and we also saw a kind of breakout there. Now, also, if you notice in Shridig, it's just retesting. It has been trending along this trend line for months together, right? And it's been doing a slow run up. Now I feel that this is going to probably show a strong move up going forward, and that's the reason I've added Shridig Cement. So we're going to focus on Jubilant India, Shridig Cement, and India Cement. And the fourth stock is from the paint segment. Right now, I posted this on Twitter again. The same reason, it has crossed CCI 100, and that's why it came in my scanner. And also Asian Paints came in my scanner, but Asian Paints is more of it's a blue chip, so I don't really focus on blue chips. I want to focus on a smaller company, not really blue chip, right? Now, the reason why I've added Kansai and Nerolac is this stock has been consolidating since 3.5 years. It hasn't gone anywhere, but it's going in probably rectangle consolidation, or probably a cup and handle also, if you may call this. Now, this is a beautiful 6 months tight consolidation. You call this also a sandwich. Now, I'm expecting that this stock might head higher. The reason is the CCI also is going here, is crossing 100. And on the weekly time frame, if you see, after many weeks, the CCI is again coming back into momentum. This week was the first time it crossed 100, and we had beautiful volumes. And again, this week we are having some decent volumes. So that's my reason for choosing Kansai Nerolac. So if you want, you can also go back, and check CCI 100 crossing on the daily time frame. On the weekly time frame, you can run 2 different scanners, try to find the stocks, scan stocks. There are almost 70-80 stocks every day. You have to scan them one by one and try to find the low risk setups. Now, all these stocks have very low risk setups. If you see Jubilant India, the stop loss is hardly 7-8%. It's just this low. Our stop loss is going to just be this low, and we're going to enter around this level. Again, Shridig Cement, it is right on the trend line. So I'm just going to keep my stop somewhere around here or even here, and I'm going to enter. India Cement, again same. There's a nice tight consolidation happening. I'm going to keep that also tight stop here, and a Kansai Nerolac. Now, you will not get just a stock just like that without doing homework. You need to do homework. So now coming into the plan for these stocks. So Jubilant India, a stop loss of 5.93, 6.63 and 4.84. Now I am buying 15,000 worth of shares in all three, and I have already placed my GTT in Zerodha. So Kansai Nerolac GTT has been placed, Shridig has been placed, Jubilant India, and a pyramid position for Apar Industries. Right, so that's my GTT orders I've set. So I'm still focusing on very few stocks because we want to compound our capital a little faster than a normal person would do. Otherwise, I'd have easily gone for 10-20 stocks, but I am focusing and trying to keep it below 10. Now, if the market turns out to be good, if we have a reversal tomorrow, a strong reversal in the next couple of days, then I'm going to be more aggressive, and I'm probably going to add more positions in the stocks which are going higher. But for now, I think if we invest all of this, I think we would be left over with probably 6-7% cash, but I think that's fine. But that's the plan. Now, how much capital do we have? We have a capital of 98,000 left after all the stop losses hit. Now, in this sheet, what I've done is I've moved the stocks from that sheet, from the sheet here to the sheet here. So stocks which hit stop loss. So Gufic Bio, Shakti Pumps, and Hindustan Zinc. And here you will see the P&L. Everything has a formula. So you just have to copy paste the formula and it'll work, right? And right now I've lost total 1862. That's because I've also included charges, which is 205, right? And other credits and debits. So you need to include your transaction costs as well. Otherwise, you will not really know how often you're trading, and you might just not see these kind of charges, which most of the people ignore in markets. Now, that's very important to focus on these charges as well. So if you already see, we have lost around 1,600, right? And that's almost around 10% of our portfolio loss. So that's why I say it's almost, you should focus on these charges as well. So that's about the trading journal, guys. Now here, I just want you to notice here. Now this was, I'm just going to update this. So we had a capital of 1 lakh. We've had total 4 trades till now, which were closed. And we have not made a single profit in any of the trades. And we have lost till now, 1178. Sorry, that's not right. Yeah. So we lost 1593 till now. Average losing amount is 398. And the biggest loser has been 857 rupees. The biggest, yeah, that's not really right. The current capital right now is 98,138. right? Now, if you see here, I've just done the R multiple table over here. So right now we have lost 2 trades between 0.0 and 0.05. So you have 2 trades here, 0.07 and 0.48. From basically, I risked 1 rupee in the market, but I lost only 0.48 rupees here and 0.07 rupees here. I've exceeded my the 1 rupee I bet. I lost 1 rupee and 9 paisa. That's because my stop loss is at 180 and it hit at 179.15, right? So this capital gets automatically updated here, right? So 98,138 automatically gets updated here. So which means now going forward, we will be losing maximum, going forward, I'll be losing maximum 980 rupees per trade instead of the normal 1,000 per trade, right? So that's it, guys, for today. I hope I have covered everything. Now I'm just going to update this also here, just to update this. 98,138 is the latest capital, right? So you see that dip. So basically we have a dip in our portfolio as of today. So I still believe we are in a bull market. It depends on whether we break the primary trend line as I discussed or not, but otherwise there's really nothing to panic. If we break the trend line, then we'll look at how we're going to trade. But if right now, I think this is a very good learning phase for you to understand stop losses, if they hit, how to manage your capital, do you have to really worry about it and all that. So I hope you're enjoying my videos with me. Otherwise, I think that's it. If you do have any questions about the trade with Trendline Investor series or on the Nifty Outlook, do let me know in the comment section. Don't forget to share this video with your friends. Don't forget to subscribe to my channel and be with me. And I'm sure both of us would learn in this series. Thank you and have a good day. Bye-bye.